Ladies and gentlemen, good day and welcome to Q2 FY23 earnings conference call of LT Foods Limited, hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumant Kumar from Motilal Oswal Financial Services. Thank you, and over to you.
Thank you. Good afternoon, everyone, and very warm welcome to LT Food Limited 2Q FY23 post-result earning call, hosted by Motilal Oswal Financial Services. On this call today, we have management team being represented by Mr. Ashwini Kumar Arora, MD and CEO, Mr. Vivek Chandra, CEO, Consumer Business, Ms. Monica Chawla Jagia, VP Finance and Strategy, and Mr. Sachin Gupta, CFO. So we will begin the call with key thoughts from the management team. Thereafter, we will open the floor for Q&A session. I would now like to request the management team to share their perspective on the performance of the company. Thank you, and over to you.
Thank you. Good afternoon, everyone, and thank you for joining us on our earnings conference call. I would like to highlight that certain statements made or discussed on the conference call today will be forward-looking statements, and a disclaimer to this effect has been included in the results presentation shared with you earlier. Result documents are available on the company's website and have also been uploaded on the stock exchanges. A transcript of this call would also be made available on the investor section of the company's website. I would like to begin by taking you through the key highlights of Q2 financial year 23. Our consolidated revenue for the Q2 financial year 23 was up by 31% at rupees 1,732 crores versus rupees 1,323 crores in Q2 financial 22, on account of increased sales from basmati and other specialty rice and the convenience and health segment. Our gross profit was up by 43% from rupees 453 crores to rupees 650 crores due to change in product mix and the partial price increase implemented on account of freight change. The freight cost was up by 660 bps that led to an increase in other expenses by 527 bps versus last year. The freight expenses are expected to stabilize or decrease from the forthcoming quarters. The EBITDA was up by 14% from rupees 157 crores to rupees 178 crores. The PBT was up by 17% from rupees 111 crores to rupees 131 crores. The PAT was up by 18% from rupees 81 crores to rupees 95 crores. The earning per share stood at rupees 2.80, up by 17%. The cash profit was up by 14% from rupees 110 crores to rupees 126 crores. Our consolidated revenue for 6 months financial year 23 was up by 32% at rupees 3,352 crores versus rupees 2,545 crores in 6 months financial year 22. This is on account of increased sales from the basmati and other specialty rice segment and the increase in convenience and health segment. The gross profit was up by 41% from rupees 1,222 crores to rupees 866 crores, and the margins expanded by 241 bps from 34% to 36.5%. There was an increase in trade cost by 540 bps that led to an increase in the other expenses, which were up by 432 bps versus last year. The company also brought in efficiencies at the manufacturing level. The EBITDA was up by 16% to rupees 355 crores from rupees 305 crores in financial year 22. The PBT was also up by 22% from rupees 214 crores to rupees 260 crores. The PAT is also up by 21% from rupees 157 crores to rupees 191 crores, and earning per share stood at rupees 5.6, which is up by 20%. The cash profit was up by 16% from rupees 215 crores to rupees 250 crores. Now, I would like to highlight the key ratios of our balance sheet. The debt-equity ratio stood at 0.5 times. This is to reiterate that the majority of our debt is working capital debt, which is required because of the nature of our business, and our focus is to maintain the debt-to-EBITDA ratio between 2 to 3 times, which stood at 1.6 times. Current ratio has also improved significantly to 2.08 from 2.04 last year. The return on capital employed stood at 16.9%. The normalized return on capital employed on account of insurance claims stood at 17.5%. The return on equity stood at 16.2%, which is up by 64 bps. And the interest coverage ratio also improved from 7.5 to 8.6 times. On the cash flow front, in 6 months financial year 23, the net cash generated from the operations was rupees 84 crores. During the year, the company made investments in the fixed assets or capital advances amounting to rupees 70 crores, and investment in the JV with Golden Star that we have done in the US, that is amounting to rupees 65 crores. Now, I would request Mr. Ashwin Arora, the Managing Director of the company, to give you a strategic update on the business. Thank you, sir.
Thank you, Monica. Good afternoon, and thank you for joining us on the call today. Happy to share that the company delivered a record growth of 32%, backed by expansion and distribution network and strong marketing programs. In India, our retail outlet reach increased by 40% and stood at 176,000 outlets. As per AC Nielsen, our market share in India expanded by 180 bps and stood at 28.5%. Additionally, as per Concall home panel data, Daawat consuming household also increased by 36% on year-on-year basis, and today stood at 37 lakh households. We are optimistic on the outlook of the overall business. The category is growing, and we are well placed to capture the growth across all our business segments. With the combination of our strong brands such as Daawat and Royal, global supply chain hubs, wide distribution network in India and across geography. Going forward, the company will continue to maximize shareholder return by keeping our focus on profitable growth. Other enablers of growth such as digitization, HR transformation, and ESG are being well executed and are going in line with strategic goal of the organization. Thank you. Now we are open the session for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Devrat Himat Singha from Augmenta Research. Please go ahead. Mr. Devrat Himat Singha, please unmute your line. Since there is no response, we'll move on to the next question from Amanjit Singh from Oculus Capital. Please go ahead.
Yeah, I'm audible?
Yes, Amanjit. Yes.
Yes. So my first question is, so we've seen on a sequential basis, that is Q1 to Q2, an improvement in the gross margin on the basmati and specialty rice, but the EBITDA margins have fallen slightly by 50 bits. So what is the reason for this?
So basic reason for the drop in the EBITDA margin is the freight cost. The logistic cost during this quarter has increased. So if you compare it with the immediate preceding quarter, there is a increase by 2.5%. And if I compare it with the year-on performance, it has increased by 6.6%. So this has led to my decrease in the EBITDA margins this quarter.
Understood. So secondly, so there were certain news articles on private equity evaluation and your fundraising. So could you help us understand what kind of proposals is the board considering, and what should we watch out for?
So there was a strategic proposal, and board is evaluating it and seek more information. So maybe in the next coming board meeting, they will decide.
Okay, but it was a complete a buyout of majority, or is it like a minority stake that they're considering?
I can't disclose much, but yeah.
Okay, sir. Okay, thank you. That's it for me.
Yeah.
Thank you. We have our next question from the line of Siddhant Dand from Goodwill. Please go ahead.
Yeah, hi. I just wanted to get some guidance on how much basmati have we procured compared to last year. Secondly, I wanted to understand why our margins are lower than the largest player in the industry. Is it because we age our basmati rice less? And are we getting any forex gains from or benefit of forex because of our export market currency becoming stronger?
Okay. So first of all, I will answer your first question on the costing side. The procurement season has just started roughly 15 to 20 days back. It was late because of the heavy, untimely rain. So the procurement is in progress as per plan. So we will be achieving our procurement target.
So how much is it over last year in volume terms?
Okay, so you wanted to know the crop size or our data?
Yeah, just the volume target. Last year, let's say we procured 100. So this year, I was procuring 110, 20.
So our total requirement, we have sourced around 15 to 17%.
Okay, perfect.
Yeah. So answering to your, second question. Second question was around what?
Margin. Yeah.
Margin. Sajjan just explained our gross margin has improved, but the logistic cost has gone up, and strategically we were not, keen to pass on this kind of cost to the consumer, as this is we believe that this is a kind of temporary, and the freight trade will settle down soon.
Okay.
Yeah.
And on whether we are benefiting from export forex gains or something?
Sorry?
Because of our currency weakening, are there any benefits in the export market?
Yeah. So it is becoming, if Indian currency is devalued, India is becoming more competitive. So that, of course, is helping us in our business.
What is our share of exports?
In terms of, you mean to say branded, in USA we have 50% market share. In USA we have around 15% market share. So India we have 28.5% market share. So we export to 65 countries. So if you talk about, the branded rice, which is, owned by India, I will check, but we have a remarkable good share here.
And what is the share of exports of our sales? Like in our top line, how much comes from exports?
So as compared in the basmati and the specialty segment, 70% of our sales comes from exports.
Okay, perfect. Okay. Thank you.
Thank you, Siddhant.
Thank you. We have our next question from the line of Anand Venugopal from BMSPL Capital. Please go ahead, sir.
Yeah, so thanks for the opportunity. So could you help me understand what is the current state of the basmati rice industry and how are prices for basmati rice holding up? And what is the outlook for basmati rice prices going into 2023? And lastly, what are the demand supply factors that are leading to this outlook? That's all from my side.
Thank you. As far as basmati rices industry is doing very well. It has become consolidated, stable, doing very well. On the pricing front, as compared to last year, the opening price is roughly 20% 25 to 30% higher, as compared to last year. And this is mainly because of the strong demand and, on the supply side there was a constraint. But this year the crop is better. We are expecting roughly around 12 to 15% higher. But demand is will take up, the success by, and the prices we believe that will remain, higher than last year.
Mr. Venugopal?
Yeah, that's it from my side. Thank you.
Thank you.
Thank you.
We have our next question from the line of Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Yeah. Hi. So thank you for the opportunity. Am I audible?
Yes, Abhishek. Yes, very well.
Yeah. So you were able to deliver a very good sales growth, and we just want to know that the current harvest has only just begun, and how are you seeing the crop? Do you think the procurement prices might come down a little, thereby helping us improve our gross and profit margin a little more in H2?
So, Abhishek, because your voice was not clear, if I able to understand your question, right. The crop is, as I told, is in the overall basmati, all basmati varieties. It is 12 to 15%. We believe, higher production is there, but there is a strong demand across all geography in the world. So prices are roughly 25 to 30%. It depends on grain to grain, higher than the last year. And we believe that, because of this weaker rupee, there will not much impact on the consumer price on the export market. And India, we have already started passing the hike in the consumer, and it's well accepted. So on the gross margin side, we will be able to maintain, the gross margin like this year.
Okay. Thank you, sir. And secondly, regarding your packaging and freight costs, so in freight costs, the increase was mainly due to road logistics or ocean logistics?
The ocean freight, yeah.
So ocean freight, we are hearing that it has started to moderate considerably in the last few months. So do you think H2 should be better, EBITDA margin-wise?
Yes. So for the last month, it has started softening, and the impact we will see in the coming quarters.
Okay. Is it a substantial impact or just a little only?
I think little, not very substantial. It has softened, but not to the pre-COVID level or the earlier level.
Okay. And sir, packaging costs?
Packaging cost, stable. Whatever the inflation has come, so packaging cost is not coming down. It is in the almost same range.
Okay. And sir, thirdly, your non-current borrowings.
Mr. Can you use the
yeah.
answer, please?
Yeah. 1 second.
Hello. Yes, Abhishek. Yes.
Yeah. So regarding your non-current borrowings, they had increased by around 100 crore rupees. Any particular reason for this?
Yeah, Sachin will answer.
During this year, this half year, we have actually made an investment in we have acquired one in joint venture in JB in USA. That was Golden Star. In that we have made an investment. That has resulted in increase in our borrowing.
Okay. And 2 more questions just. And since your working capital requirements are very high, what do you think the rate hike impact is going to be in coming quarters? Will it be substantial impact or just marginal?
It will be there will be an impact, but it won't be a substantial impact. It will be a marginal impact. Yes, my cost of the capital will increase. That is for sure. Currently, it is at 6%. It will be increased to another 0.5%.
Okay. And sir, one last question. How's the demand coming from North America and Europe at the moment? Because, there are some fears and supply chain issues there.
So demand is good, as this, as Sachin said, 70% our revenue comes from export, and last, H1 we have delivered 31% growth. So it's a healthy growth, both in the Western world, Europe, America, and India.
So any new geographies you're entering right now?
So we are almost present, across the possible area where the consumption of basmati can be consumed. So we are available, in all the places consuming.
Okay. Thank you, sir. I'll get back to the queue. All the best.
Thank you, Abhishek. Thank you.
Thank you. We have our next question from the line of Amit Doshi from Care PMS. Please go ahead.
Yeah, thank you. And congratulations on achieving that 2% additional market share in the domestic market.
Thank you.
Sir, just one question about this Golden Star. Now we have 51% controlling stake. So how are we accounting for it? And say, for example, what growth that we have seen from 1,300 to 1,700 crore. So what portion is contributed from that jasmine rice business?
So as far as the accounting is concerned, we are doing equity method of accounting. In that, we are just recognizing the share of profit, and that is accounted for in our financial statements, in the 6 months financial statement that we have disclosed.
Okay, so the top line, so sales figures are not accounted for in the current numbers that we look at it.
No.
Okay. Okay. And sir, second about this domestic growth, significant. I'm sure there will be some significant steps that you have taken, where strong number of outlets as well as distributors have been increased. So, what is the plan for going forward for the next year or so?
Yeah, Vivek,
See, what we are seeing now is a result of some very fundamental work which has been done in our route to market and in our brand building over the last 2 years. And that is now playing out in terms of increased home penetration, in terms of increased distribution. These programs that have been put in place, they still have a lot of headroom. So going forward, these sort of growths in the fundamentals of consumer acquisition and retail store expansion, we believe we will continue to see, and it is being supported also with an increase in the category demand in the country.
So we have more marketing spend to do, or this has kind of fundamental steps have already been taken, as you said?
No, the marketing spend is a continuous process. In fact, it's a brand that we will keep supporting and building, and our marketing spends are higher than what we did last year. And in response to business, we will adjust and grow, but I think we will keep growing the marketing in relation to the growth in sales.
Okay. On the freight costs, just a couple of points. So basically what we read in the newspaper or the freight index that we track, there is a significant reduction already in place is what we understand. So why the same has not flown in the real numbers, which you are indicating that it has just started softening from last month, and what we see from the articles or the numbers indicates otherwise. So if you can just throw some light on that. And second, while freight cost I understand is more on the export side or on the that side, our domestic margins are also not very great. I mean, despite increasing such a sharp domestic business. So can you just clarify on these points?
Sure. So as far as the steamer freight, as I said, it has started softening for the last month, and it will have a positive impact in the coming quarters. Regarding India, the margin has improved for us.
Okay, so when I look at standalone numbers, I understand standalone will have export numbers as well, but when I look at standalone, there is no improvement in the operating margins.
Yeah, but in standalone, there was a, if you're saying, because it's a mix of trading also, we have done with China. So that's a mix of, but as far as branded business is concerned, we have improved margin on that.
Okay. And so the contribution, what would that be in terms of?
China will be how much?
In this half year, the China was contributing 140 crores of my revenue.
In the H1 you are saying, not in the Q2?
H1 I am saying.
Oh, okay, fine. Sir, in terms of this price, whatever freight costs that are being passed on, we have done it partially only. Our brand, whether it's Royal or Daawat, is such a strong brand. Where are we not able, or we don't intend to pass on the full freight, because we are at quite the fag end or the lower end of the margins that we have been in our history.
So as I said in the starting that there's we Daawat and Royal, very, very strong brand. Royal is a 50% market share. But being leader, we have a responsibility also. So we have to see which cost is sustainable and which is not. And we don't want it to, be volatile in consumer pricing. So we believe that, the steamer freight will come down, and this is, we have to take the hit of, whatever that temporary has gone up. So whatever was sustainable, we have passed on to the consumer.
Okay. And sir, in this convenience, health and convenience segment, when do we plan to break even?
I think, at this point in time, the real question is that we propose to make this a significant part of our business. So really, it's more about expanding that range. There are, for each of the projects, there is a individual P&Ls with break-evens projected that have been made. But our current focus is for them to become meaningful and significant part of consumers' lives, which then translates into a good share of our revenue. And it will follow the pattern that you see with most consumer companies' new product launches.
Okay. So we have some pipelines with new products, say in next 2 quarters or so?
Yes, we do. But we've actually just launched a very exciting product with the biryani kit, which is gaining very good consumer acceptance. Kappa rice continues to build. So if you were talking of the next 1 or 2 quarters, our focus is going to be on building these in India and international, and to continue to build the strong position that we are acquiring with the RTH, the Eat and Eat, into the US.
Okay. And can you give this HoReCa segment growth, how things have been, because of course 1 year was very bad. So now how HoReCa segment is doing and what kind of growth have we seen, or some contribution that is there as of now?
HoReCa segment, can you give certain data? As compared to last year, must be growing more than 50%, I think, but we will have exact data.
The HoReCa segment now is contributing 19% of my overall revenue. So it has grown by more than 15% from the last year.
15%, 15.
Yes.
Okay. Any number? I mean, what would be the? Sorry, 19% you said already. Okay, fine. And so lastly, I understand that this PE thing or whatever acquisition or whatever. So I'm not getting into that part. What I want to know from you is you have been so far guiding of 10 to 15% growth, and of course some margin expansion that you have already indicated in past multiple times. So now that we are planning for some fundraising, I'm presuming we already generate 500-600 crore annual cash flow. So we are thinking something big or something higher target of growth rate. So what has changed that management growth target, and why? If you can just share on that part.
So still we are maintaining 15% growth year on year. and the margin expansion. This is, I can't disclose at the moment, but this is a very strategic in nature. So the unfolding will happen when it will happen.
Okay. Thank you, and wish you all the very best.
Yeah, thank you.
Thank you. We have our next question from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, hi, good afternoon. Few questions. So first one is on organic piece. I think there has been a material dip in the revenue run rate, which we were doing since the last few quarters. So is there any issue there, or there's like a one-off and will come back from next quarter onwards?
So Resham, this is a one-off. It will come back, and the reason is there was a big shipment which was pending and we can't load in this quarter. So this will come up. It will be, again, in full year basis, we will be in double-digit growth. Yes.
Okay. And what is that we are looking at the organic business, sir, in terms of, let's say, over next 2-3 years? Are we going to maintain the run rate which we have shown over the last 3-4 years, or now on a higher base, now it will start moderating?
So in the higher, this, base, it will moderate for sure. It will not be in the range of like 30-35%, what we have delivered in the last, 2 years. So it will be in the double digit, but we are very bullish on this business. The idea in this business is now to more focus on the margin expansion in organic business.
Okay, understood. And also, sir, on the new product business which Vivek sir spoken about. So there, with now I think a few months into this new product launch, specifically Biryani Kit, any color on what is that you are targeting? Because I think you are doing domestic as well as exports, and any focused kind of market which you feel can be scaled up from the current levels, and what will be the distribution approach in this business, specifically the new product business, Biryani Kit and Kappa Rice?
Right. So, of course, for each there is a different RTM that is planned. So let's talking about Biryani Kit, which will be in broader distribution. But the initial approach for these is really, for us, has been to test the waters, and we've done that through going into e-com and then expanding into the top supermarkets. So as of now, that's really what the availability is, and it is from here that we are getting very good traction. In some of the e-coms, we've become, new product top sellers in the way they measure and they record onto their own platforms. With this, once we've got a certain amount of proof of concept, we'll start to be expanding this into the total supermarkets and the top groceries. So we will be following a top-down approach when it comes to this Biryani Kit.
Okay. So just one related question on the new product business. If you look at the gross margins of the new product, which are considered to be more value-added products, and if you compare it with the other businesses, Basmati and organic, the gross margin seems to be much lower than some of the other categories, as well as if you compare it with some of the other food businesses, the gross margin seems to be much lower, 30% odd gross margin.
Right. Because I think what you're seeing here is a blended gross margin. There is a fairly large contribution in here of Daawat Sehat, which is in the health, both doing it serves the social cause of addressing malnutrition and severe acute malnutrition in the country. But the point is that, that tends to follow more like the basmati margin, but has a significant contribution. But the other products are all following the margins, Mr. Resham, as you talk about, food, consumer, branded, those, the other product margins are in line with that.
No, actually, this is lower than basmati as well. Like 28% gross margin in this quarter. It was 33 in the last quarter. Last year, I could see it was 36, 37%. So constantly, this typically gross margin in this businesses we have seen at around 50, 60% and more. But like 30 to 40, even 36, 37%, which was on a higher side last year. The number seems to be too low for a consumer product like this.
I think you need to see the segmental margins. So the movements that you're seeing in the total are a function of how the contributions of the different products are moving. But individually, they are robust. So, some of the newer products that you spoke of are going to be in the 40 ranges.
Okay, because it's there in the presentation, so maybe I don't know.
No, that's a fair point, but I think as I mentioned, it's a blended margin that we're seeing, so that's sort of clouding the picture. But the fundamentals which you are alluding to are all there, and the segmentals will show that.
Okay, got it, sir. So the last one from my side is on number of households. I think you mentioned 37 lakhs or something. So what is the target kind of addressable market for us over here, and what is the approach we are taking here to get to that total addressable market?
See, the total addressable market, in a sense, is the total households. Now, basmati consuming households are about a third of the total FMCG consuming homes, but this is growing at a double digit. So we're sort of not working on an absolute target. Our target is to grow at a rate which is faster than the growth rate of the category. And that's really, falls back into the fact that we want to keep growing our market share quarter on quarter. So our target, basically, when we measure these numbers and report these numbers, these are more evidence of the successful marketing and distribution campaigns not campaigns, but strategies that are in place. And these are the growth in share, the growth in homes, the growth in outlets are numerical measures of the success of those strategies.
Okay, sir. Got it. Thank you and all the best.
Just one addition to the point I made earlier about this whole blended. As we bring in new products, there is a fair amount also of sampling which is done free of cost to gain new users. And if in a quarter that's quite heavy, that can also bring down, but treat it more as a marketing expense than a margin erosion.
Okay. Understood, sir. Thank you.
Thank you. We have our next question from the line of Amit Agarwal from Leeway Investments. Please go ahead.
Hello. Hello.
Yes, sir.
Hello. Sir, we bought a 30% stake in Leave.nu in January 2021. Right now, if you go through that website, it's just a one-page website, and all the links are leading to some Instagram articles.
I'm sorry to interrupt. Your voice is breaking.
Oh, just hold on. Hello. Is it clear now?
Yes, please go ahead.
Sir, we bought a 30% stake in Leave.nu in January 2021. Right now, if you go through the website, it's just a one-page website, and all the links lead to Instagram. So, as far as I understand, this is a dead investment. Can you comment on this?
So, Leave, the investment is only, 200,000 euro, which is equivalent to 60 crore. Just a minute. If I have understood it correctly, let me understand from Monica. Yeah.
Hello.
Mr. Agarwal, please take
So, Amit, this is not the dead investment. Although, we have done a small investment. The League as a brand is doing good in, the Netherlands. And, they are adding the product also. So, the investment is not dead. Although it's a small investment, the business is working and doing good.
But it's just a one-page website. I thought it's an e-commerce site and it's an e-commerce venture.
Monica just added me. If you have gone into the wrong website, the right website is leave@.nu. It's
that's what I'm talking about.
Very impressive. It has opened in front of me, and if you can see the kind of the product range they have, you will be amazed.
Anyway, another question is 75% of our profit comes in consolidated balance sheet, right? But if you go through the annual report, then it seems none of the subsidiaries are so much profitable, and only one of them is making 70 crores of profit around about. So can you elaborate on this?
What is this?
Sales come from international market.
Okay.
No.
No, I think let Sachin understand your question right, and then he will answer.
Shall I repeat the question?
You can repeat the question, but
70% of our profits come from consolidated balance sheet, right? But if you go through the annual report, then it seems most of the subsidiaries are so much. None of the subsidiaries are so much profitable, and only one of them is making 70 crore profit per annum. So where is the profit coming from? The consolidated balance sheet.
All of my subsidiaries are making profits. Firstly, you need to check the data, and apart from LT Foods, that is the main company. We have in India Daawat Foods. That is also making.
I think Daawat Food is making 70 crore profit. That's the most profitable besides our standalone company.
So apart from that, there is a US company as well. That is LT Foods America. That is also making profit. There is a.
Can you elaborate how much?
So what we will do, so you send your query. So what I can tell you is all the subsidiaries are making profit. But we will, if you can email.
No, that is fine. I understand that. But none of them is adding up to the 300 crore profit. The profit on consolidated balance sheet is huge.
Your voice is also cracking, and we could not, hear you properly.
Use your handset, please, Mr. Agarwal. Your voice is cracking.
I'm using my handset only. Because I repeat.
But I would request Amit to refer to page number 319 of the last year annual report to go through the details of the profits that the subsidiaries are making. So it's very evident that all the subsidiaries are profit-making subsidiaries. Please refer to page.
That is fine. But none of them is adding up to 300 crore profit. That's my question. The annual profit is around about 300 crore. But if you add up all the companies that just make subsidiaries, that's almost 80 crores or 90 crores.
No. You can. We will give you the breakup of that. That will be added up. So there is an addition that is the amount. You can give us your email ID to our IR, and they will provide you the company-wise profitability, and it will be adding up to my 319 crore, whatever that I have declared.
And my third question is, you have equalized products. Sir, I tried to search them online. It's not available in India. It's currently out of stock. And same goes for Europe. Europe is almost impossible to find any website selling equalized products. So where are they sold basically?
We always say that, our organic business majority is B2B business, and it is exported to Europe and America. We sell organic products. That's a very limited, in the northern part of India. And in USA, we sell organic product under the brand name of Royal. So if you go to the Costco and you say Royal Organic Basmati, you will find it.
And my last question is, Big Basket has their own private label,
Big Basket, BB Royal. So are we in partnership with them because the brand is quite similar to our brand? Are we in partnership with them or they are BB Royal Basmati rice?
So there is no partnership, but that's an IP issue, and our legal department has taken up with them.
So we are not benefiting from BB Royal as such.
No, we are not. We are not.
Okay, thank you.
Thank you. We have our next question from the line of Aman Madrecha from Augmenta Research Private Limited. Please go ahead. Mr. Aman Madrecha, please go ahead with your question.
Hi, Amit. Aman, sorry. Hi, Aman.
Please check if you have muted your line. Since there is no response, we move on to our next question from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hello.
Yes, Vipul.
Yeah, congratulations for good numbers, sir. My question is, previously you used to share all the volume details for domestic and export business, and in domestic also you used to segregate it between rice and non-rice. So that practice you have stopped. So
we have done strategically because of competitive reasons.
Okay.
Yeah. So we will share all relevant data where the investor wants. So we have accordingly designed the presentation.
Okay. So if I send the mail, will I get those details, or you have stopped that practice?
So please send the mail. So our IR department will get back to you.
And sir, what is the status of our court case? It is pending since a very long time. Any update there?
That's very unfortunate, the Indian legal justice. But we are expecting by the end of the year, the first court verdict will come.
And sir, can you comment on the performance of our European business? So, what is the turnover and what is the profitability?
Sure, people. The Europe business is doing extremely very well, and we are using the full capacity. And this year we will be doing full year basis more than 100 million euro, which is equivalent to 800 crores. Profitable business, doing very well and growing.
It will be EBITDA positive, sir?
Yeah, PAT positive.
PAT positive. Oh, wonderful.
Yeah.
Wonderful. Okay, sir. Thank you and all the best.
Thank you, Vipul. Thank you so much.
Yeah, send the mail, please. Please, if possible, please share those details. Thank you.
Please do that. Thank you, sir.
Thank you. We have our next question from the line of Vincent Andrews from Geojit Financial Services Limited. Please go ahead.
Hi, thanks for the opportunity. I have only one question. Most of the questions have been answered. First of all, congratulations for the good set of numbers. You have grown around 32% in the first half. So if I can ask, what would be the growth you are expecting in the second half and next year on that? Because if I see for the last 2-3 years, the revenue growth was 12% in FY21 and 16%, 17% around in FY22. Suddenly, the growth expanded to 32% in the first half of this year. So what drove the growth on the distribution strength or anything else? And what would be the growth if you can grade for FY24? Only that question.
So on 23rd, ending, we are expecting on full year, more than 20% growth.
Okay.
And rest, what is? Yeah.
I think FY24 is still under discussion with the individual businesses because, there are things which are working strategically right for us which are driving this growth. But to sustain this level of growth, we will have to work with individual businesses and on their plans. So our AOP process and the 5-year planning process is currently underway, and only once we've completed that will we have a picture for FY24.
Okay. So if I can ask, the sudden jump in the growth in this year from the last 2-3 years if you compare. So is it the distribution expansion only causes this?
But distribution expansion has certainly played a role, but it is really 3 things that is driving that growth, whether it is in India or in the US or any of our major markets. So the one is distribution, but the second is that there is a very sustained and consistent marketing marketing program which is being delivered in all the markets, which is gaining for us new users and is helping in retention and trial generation. And the third driver has been the fact that the overall portfolio of Daawat and Royal is getting strengthened as more and relevant convenience and health products come in the market, which then feeds also into the main brand. So really core adjacencies and distribution are all coming together to give this growth, and not just distribution, Mr. Vincent, as you were referring to.
Yeah. Okay, got the point, and best wishes. Thank you.
Thank you, Lucy. Thank you.
Thank you. We have our next question from the line of Shubhankar Oja from SKS Capital and Research. Please go ahead.
Yeah, hi. Thanks for the opportunity. So just with respect to the EBITDA margin, just coming back to the freight cost, can you give me the number with respect to freight cost as percentage of sales in current quarter versus last year same quarter?
So this current year quarter, my logistic cost is 13.7%. If I compare it with the immediate preceding quarter, it was 11.3%. And if it is compared with the year-on-year quarter, it was 7.2%.
That's a big increase. And with respect to the current trend, which means quarter 3 trend, where do you see this number settling at?
So, Subhankar, this is the peak. As you have said, this is the peak one. So, this will be lowering in the going forward quarters. So, this we consider it as the peak.
Okay. And so, with respect to this presentation, so obviously we set up EBITDA margin target of 140 to 150 basis point. That's 5-year target for us. Can we, the request would be, can we put a number, absolute number with respect to this is what we aspire to do 4-5 years down the line? Because right now we are doing, say, 10%. So current quarter taking as a benchmark, we are basically talking about a 12% sort of. Is that our aspiration, or do we intend to do much better than this?
So what our aspiration is to do 13.5% EBITDA.
13.5, okay.
13.5, there we are working towards here.
Okay, yeah. So I think that can be added to this slide, I think, because basically it keeps changing, obviously.
Okay, but we will do that.
Yeah, and you did say that on the organic part of the business, there was basically shipment delay, sort of, right? Which is why the revenue declined.
Yes.
All right. Thank you so much. Thank you.
Thank you. We have our next question from the line of Aman from iWealth Management. Please go ahead.
Hi, am I audible?
Yes, Aman, yes.
Yeah, thank you for the opportunity, sir. Congrats on a great set of numbers. Sir, wanted to understand from the prices which we were trying.
Aman, your voice
came down.
Can you repeat your question, please?
Yeah. Now is it clear?
Yes.
Yeah. So we are seeing, sir, on a month-on-month basis, basmati prices have came down 12 to 15%. So is it seasonal or is it the demand which is softening as of now? Can you help us clarify on this part?
I don't know what you are referring to, but the basmati prices are getting stronger. So as I said that against last year, the new sourcing has opened 25 to 30% higher than the last year.
Okay, got your point. And second question was from the insurance recoverable, the amount which we have classified in the non-current assets. This quarter, which you have said the case is also pending in the civil court. If you can help the clarify amount of that amount.
So the amount standing in my books is 134 crores. So that is the insurance claim receivable in the books of accounts.
Okay. Previously, you have written off of 44 crore also, which was.
So it was 5 years back. We had written off 44 crores. So my original insurance claim was 178 crores. So, but the claim which we have to receive is that is 178 only. So we have provided for in our books of accounts to 44 crores.
Okay, got it. Okay, so that's it from my side. Thank you.
Thank you.
Thank you. We have our next question from the line of Vihang Subramanian from Zaba Capital. Please go ahead.
Yeah, hi. Just wanted to know, how does export realizations get determined for us in the basmati rice segment? Like, do local production dynamics come into play?
Yes. Can you repeat your question, please? Like, you mean to say how the basmati price discovery happens?
Correct, exactly. Like for our export market, because I just read somewhere that in India a lot of the production was curtailed, and because of that price increases happened, and your international growth also looks really good. So just trying to put things together, like is it because of that, or am I missing something?
Actually, if you see the basmati, Indian basmati has a kind of, the basmati is a monopoly. 80% of the basmati production happened in India. And the price discovery happened on the size of the crop. So if the crop is short, then the prices got strong, and if crop is excess, the prices got softer. So this is the fundamentally how the price discovery happens. And so Pakistan has a role to play, but that's only 20% of the production. So on the demand side, consumer is what we have seen historically. The consumer is insensitive to price to the basmati. So the price increase has not impacted any demand.
So there has been a price increase though this year in FY23.
Yes.
And could you quantify how much, like how much percentage price increase has come through for?
So I can roughly as compared to last year, the sourcing price for basmati has gone up. It depends on variety to variety, 25 to 30%.
Mr. Subramanian?
Got it. Yeah. So price increase has been 25 to 30% for this year then, for FY23.
On the paddy level, yeah. On the raw material level.
Got it. And sorry, I missed the starting of the call, so apologies if you answered this before.
No, it's perfectly all right.
About the organic segment.
Huh?
Could you just talk a little bit about the growth in the organic segment? I think the growth has, seen a bit of tapering off. So what has really impacted that? And could you just give some guidance for what should one think of for growth in the organic segment?
Sure, yeah. So if you see the H1, we are flat, and the reason is that the shipment got delayed. But if you will see year-on-year basis, the growth will be double digit. Whereas, if you see the historically 3-year CAGR is 36%. I hope that we have answered the question.
Sure, sure. Got it. Sure, that's it from my side. Thank you so much. Good luck.
Thank you, Young. Thank you for your questions.
Thank you. We have our next question from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello.
Yes, Arpit.
Yeah, I just wanted to understand your revenue guidance. You were just guiding for 15% revenue growth for FY23. First half, we have already delivered more than 30% revenue growth. So what is actually stopping you to guide at least, let's say, 25% or plus revenue growth for this year?
So, that's, because, we have always give the volume kind of, and this year, volume and value both has grown, and that has led to, the 32% growth. And full year basis, as I said, we are expecting this year to close on full year basis more than 20% growth.
Got it. So typically H1 is on the lower side for LT Foods. It's around 40-45% of sales, and we've gone close to 3,300 crore. Yeah, so is it good enough to say that we'll be able to, let's say, cross 7,000 crores revenue for this year?
Under 7,000, I would say,
It will be around 7,000 crores?
Around, less than 7,000.
Less than 7,000.
Little less than, yeah.
Got it. And can you just bifurcate the revenue growth, let's say, in volume, price realization, and currency tailwinds which you would have got in the first half?
Sorry, could you repeat that, please? What bifurcation are you asking?
Volume growth.
Yeah, volume growth, price realization growth, the R realization growth, and the currency tailwind that you've got due to the dollar appreciation.
So my volume growth in this half year was 15%, and my realization growth during this half year is around 18%.
I missed your volume, sorry.
Volume is 15%. 15% growth.
Got it. That is for the first half, right?
Yes, it is in the first half.
Thank you. And do we have typically any hedging that we do?
Yes, we do the hedging, and that is as per the policies which we have adopted. So we do hedging, forward hedging, everybody does forward hedging.
Got it. And just coming to the strategic tie-up or the private equity investment that you all had announced a couple of days back regarding an announcement. So just wanted to understand, would that be happening at the company level or at the subsidiary level? Because we have seen in this just 2 years back, we had announced a deal where a shareholder had changed hands in Daawat Foods Limited, which was our wholly owned subsidiary, where we own 70% and 30% is now owned by Saudi Arabia, one of the Saudi Arabian funds. So just wanted to understand, would the money be coming to the company, or would that money, let's say, be going to the promoter, the family? What would the deal structure look like broadly?
Yeah, I can't, discuss, it is in the board level. I can't disclose at the moment who is coming and the name of the, but, I can say, whatever will happen will be good for the company. And as I said, will unfold, when this next board meeting.
So you expect to conclude this this tie-up or this investment, let's say, by this quarter, or you think the board would require more time?
It should, it will, I can't give you the timeline, but, whenever, you will get the information, yeah.
Perfect. And just wanted to understand, let's say, our presence in the Middle East is very much limited. And if you see one of our competitors who was struggling with a distributor, had opened up a lot of space for, let's say, other players in the market to capture a bit of market share. So are we thinking in those lines?
Sorry? Okay. What you said, can you repeat that? Can you be little slow?
Yeah. So in the Middle East, one of our competitors was struggling due to a change of distributor.
I can't comment on competition here.
No. I'm just wanting to understand your perspective. How you are looking to gain any market share over there because they are struggling?
No, but Saudi is a very big market, 3 million ton, and we are doing good, so I can't comment on further that here.
Got it. And just coming, just last part on the freight expenses, we have reported on 13.7% before this quarter. So where do you see this number, let's say by H2 FY23?
So as I stated, this is the peak number. So what we are expecting that this number to come down. So it all depends upon the freight which we will be getting in the different territories. Of course, this is the peak which we have achieved. So this is the.
So whatever savings you would have, let's say in H2 FY23, that will all flow to the EBITDA line of it.
Because we have passed on the freight cost, and of course it will have an effect on the EBITDA.
Got it. Thank you so much. Best of luck.
Thank you, brother. Thank you.
Thank you. I would now like to hand over the call to management for closing comments.
Thank you, everyone, for your continued support. Hope we were able to address all your queries. Should you have any further questions, please feel free to contact our investor relationship team. Thank you, and look forward to see you soon. Okay, bye.
Thank you. On behalf of Motilal Oswal Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.